Bismillahirrahmanirrahim. Assalamu alaikum. In this lecture series, we are going to discuss about finance, in which we are going to cover the subjects of finance such as business finance, finance theory and practice, financial management, corporate finance, and other related topics. So let's start with an introduction of finance. In this lecture, we will be having some learning objectives such as what is finance, why the role of financial managers is so important, describe financial management in terms of three major decisions areas, identify the goal of firm and understand why shareholder wealth maximization is preferred over other goals, understanding of corporate governance, understanding the basic responsibilities of financial manager. So let's start with finance. Finance is a science of management of money and other assets. As we know that financing always relates to assets and assets are always related to financing. So whenever you are going to buy an asset, sell an asset, manage an asset, these are the three major areas of finance and all these areas are related with money. So finance is a science of management of money. You can simply say that finance is a science of management of money because and other assets is already included with related to money activities. So finance is a science of management of money and other assets, or you can say finance is a science of management of money. Why should I care about financial management? Everyone can think that I'm not doing finance specialization, I'm not a student of finance. I am doing project management. I am going to do marketing. I am going to do HR. Even I am an engineer. So why I should care about financial management or finance? Actually, in real life, finance is so much important, such as prepare for the workplace of tomorrow. When you go to the workplace, there will be several terminologies from finance, and people around will be using those terminologies. So, you are supposed to be prepared for the workplace of tomorrow, broadening expectation of financial knowledge and skills. So if you have more financial knowledge and more skills, it is going to broaden your expectations and other expectations as well. So use and understand financial terminology and concept in team communication. When you are be working in a team, so there will be so many terminologies related to finance. You are supposed to know those terminologies. Developing cross functional capabilities, you can work with several other organization, other departments, and other people. It will help you to work in cross functionals. So critical thinking, of course, finance and numerical subjects normally improve your critical thinking, your analytical skills. So let's start with financial management. What is financial management? Financial management is about acquisition, financing, and management of assets with some overall goals in mind. So it's, you can say, about three things: acquisition, financing, and management of assets. So these are the main three decisions in finance courses. Either it's business finance, financial management, corporate finance, investment analysis. Your decisions, your calculations will remain around these three major activities. So excuse me. So investment decision is one of the major decision, which we are saying that acquisition decision, because basically acquisition word is to acquire something, in which you are actually making an investment decision. So investment decision is the first decision in finance you are going to take as financial manager. It is the most important of three decisions. What is the optimal firm size? How much you have to invest? What specific assets should be acquired after having an idea of firm size? So what type of assets you are going to have in your firm? What assets, if any, should be reduced or eliminated if you want to sell, or you want to replace, or you want to end with one asset? So how and which assets you are going to replace? So it's all about investment decision. In investment decision, majorly there is a cash outflow and assets, other assets, fixed assets inflow. And the second one is financing decision. Determine how the assets, left hand side of balance sheet. It's always one side is left hand side and one is right hand side. So left hand side is about financing of, will be financed, uh, RHS, right hand side of balance sheet. Sorry, it's basically determine how the assets are left hand side of the balance sheet, will be financed by uh, liabilities are owner equity, which is the right hand side of the balance sheet. So what is the best type of financing? What is the best financing mix? Which from where you are going to require financing? What is the best dividend policy? How you are going to pay? How will the fund be physically acquired? From where and how you are going to acquire the fund? So it's all about financing. So basically, determine how the assets, left hand side of balance sheet, will be financed by the right hand side of the balance sheet. As I have earlier mentioned, that right hand side of the balance sheet is uh, owner equity and liabilities. So the third decision is asset management decision. How do we manage existing assets efficiently? We have decided, we have take the decision of investment, we have take the decision of financing. How many assets, which assets we are going to acquire, and how we are going to finance those assets. Now we have those assets, we have arranged investment and financing. So now we have those assets and liabilities and owner equities. So now we have to take care of those assets and we should manage those assets. How do we manage existing assets efficiently? Financial manager has varying degree of operating responsibility over assets. Greater emphasis on current assets management than fixed asset management. So in asset management, basically the responsibility of the manager will be to manage current assets. Fixed asset decisions are basically in investment and financing decisions, so that does not come under the asset management decision. So three decision: investment decision, financing decision, and asset management decision. That's all about the finance and financial management. So let's discuss about the goal of the firm. The goal of a firm should be maximization of shareholder wealth. What is maximization of shareholder wealth? How the wealth of shareholder can be increased? Its value creation occurs when we maximize the share price of current shareholders. So value can be increased by increasing the share price, and share price can be increased with the efficient performance, with good performance of the firm. So profit maximization is another term, maximizing the firm earnings after tax. It's only about the earnings. It's not about the wealth maximization. So problem in profit maximization is could increase current profit while harming firm. How it can harm firm? Defer maintenance, issue common stocks to buy T-bills, ignore maintenance, not invest in long-term firms decisions. So just saving the money and showing that we have earned a lot, so it is going to harm the firm in long term. It also ignore changes in the risk level of the firm. So that is why profit maximization is not considered a good decision. Wealth maximization is something that should be focused, and that should be the uh, goal of a firm. Strength of shareholder wealth maximization: take account of current and future farm profit and earning per share, the timing, duration, and risk of the profit, and EPS, dividend policy, and all other relevant factors. Thus, share price serves as a parameter for business performance. Share price can only increase if firm is performing very well in long run. So that's why share price is a parameter for business performance. One other concept which is important to be understood is corporate governance. Corporate governance represents the system by which corporations are managed and controlled. And some definitions say that it is a system by which companies are directed and controlled in the best interest of all stakeholders. So it includes a firm include shareholder, board of director, and management. It's a triangle. It's a triangle. In this triangle, one side is shareholder, one side is board of director, and one side is management. So shareholder are the owner, management are managing the firm its day-to-day activities, and board of directors are considered as watchdog. They are watching over, they are supervising, they are overseeing the management as they are answerable to the shareholder. So, as they are appointed and elected by shareholders, so they are answerable to the shareholders. And management is selected by the board of directors, so management is answerable to the board of the director. So it's a triangle. So shareholder wealth maximization remains the appropriate goal in governing the firm, because shareholders have the money and they invested the money, and it's their money and it's being managed by shareholder management through board of director. So shareholder wealth maximization remains the appropriate goal in governing the firm. Thank you very much for listening. It is requested to subscribe the channel Dr. Muhammad Yar Khan and press the bell icon so that you will receive all informative videos well in time. We are going to record several lectures in this lecture series uh, related to finance, related to research, and related issues. Thank you for listening. Assalamu alaikum.